You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I don't know that unless you need the money, I don't think that I would sell here, because something's going to happen there's going to be some catalyst, some trigger mechanism. I don't know if it's going to be a Fed pivot or what, maybe something geopolitical happens. Who knows? Something's going to happen that'll ignite this sector, and it's going to run quickly, and it's going to, it'll be led by gold and silver, and they're going to move quickly higher, and then the mining stocks will follow.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, touching base with Dave Kranzler of Investment Research Dynamics. Dave is also the editor of the Mining Stock Journal. Dave, welcome back onto the program. I know that you track investor sentiment in this sector, and you subscribe to some services for that, but you also get feedback because you write this journal. Share with us a little bit about your thoughts of what investors are feeling right now, and what are your thoughts as well?
Hey, investors feel great about this sector, don't they? Obviously, the sentiment's terrible right now, and it's not just investors. It's mining company managements and CEOs, especially the juniors. I know we'll get to it later. I'm sure that the Calibre share management is dancing a jig in their office because of the deal they just struck. But right now people like to say this is the toughest market they've ever seen. I don't know how many of those lived through the late 2011 to end of 2015 mini bear market in the sector. There was a couple years in there, probably 2013, 2014, when the sentiment was just as bad. And then, again, there's, I'd say, a fairly decent percentage of the investors that are active in the sector now didn't get active in this sector until after 2012 or after 2016, right? And so there's not a lot of us around who remember what it was like in 2008, and it was a shorter time span for the market to do what it did. But the market, in terms of valuations, got just as washed out back then as it did now. And if you do it, put a long-term chart and you just graph GDX as a ratio of gold, you can see that it was almost as cheap back then as it is now. It's actually been a little bit cheaper relative to the end of 2015, and it's about where it was when the 20-year bear market from 1980 to 2000 was bottoming out back in 2000, 2001. I jumped into the sector in early 2001. And so, the valuations relative to the stock market and gold and silver were just as bad then as they are now. And talk about sentiment. There weren't even a lot of investors in this sector back then. Now there's a lot of investors. I'm actually surprised how many are hanging in. And that includes my subscriber base. My subscriber base is lower than it was a year and a half ago, but that's to be expected. But I think people are feeling pain with valuation levels and what's happened to these stocks, but at the same time, I think they see the same things that we do, and that's why they're willing to hang around. And so, will we recover from this? I don't know. A point I wanted to make is that one of the things that these mining companies learned from the 2011 to 2016 period, or into 2015, and also same thing back in 2008, was that a lot of these juniors with good projects, they're in better shape than they were during those previous two periods. They kind of learned. There was a lot of companies that went out of business in between late 2011 and 2015. They couldn't raise capital. There's still companies today companies are able to still raise capital if they've got a good project. And there's capital out there. There's investors out there, investment funds out there that have capital to invest in these things. When you see what happens to stocks like Marathon today, it sucks for the Marathon shareholders, because in a better market, Marathon is worth a lot more than it is now. But for companies who are willing to take the risks, like Calibre, and say, I'm gonna buy at what I think is the bottom, I think the potential payoff down the road is huge. And it's the same thing for investors, individual investors like us. If you're willing to hold your nose and buy, if you got cash that's still around to invest. Some people don't. Some people went all in and they just have to ride them out. I don't know that unless you need the money, I don't think that I would sell here, because something's going to happen there's going to be some catalyst, some trigger mechanism. I don't know if it's going to be a Fed pivot or what, maybe something geopolitical happens. Who knows? Something's going to happen that'll ignite this sector, and it's going to run quickly. It'll be led by gold and silver, and they're going to move quickly higher, and then the mining stocks will follow.
Dave, do you think it could be a monthly close above $2,100 an ounce? Because I've heard people say that could be the trigger where momentum traders, it comes up on their screen and here we come.
Maybe, I don't know. I'm talking about, the technicals are what they are. And it drives me nuts that everyone gets so wrapped up in what the technicals are. Because, what makes 2,100 a magic number other than technicals? I don't know. I like to look at things from a fundamental standpoint and from a long-term standpoint.
An all-time high monthly close, I think, is the idea.
Yeah, but technical triggers are short-term. And what happens is everyone starts to pile in. You get speculators piling in, and it runs things up really quickly. And then they settle back into where they should be, given the fundamental backdrop. So yeah, if you're a short-term trader, maybe 2,100 is the trigger point. Maybe you're going to jump in and you're going to, swing and trade GLD or whatever, gold futures or some of these mining stocks. You're going to hold them for a month or two, maybe make, 10, 15%, whatever. I don't know, whatever the number is. And then you're going to sell. And, and then what'll happen is there'll be a correction from that technical move and you'll look smart. And then what's going to happen is, especially the momentum guys, they're going to be on to whatever the next thing is that's moving. And they're going to miss the big move in this sector because the big move isn't from XYZ stock going from 10 cents to 20 cents, right? XYZ stock with a project that's getting, will possibly have a mine pouring gold within 2 years. The big move in a stock like that is from 10 cents to 80 cents. So, and that's the kind of move that I'm looking for. And that's the kind of move that I think is available in these junior mining stocks if you pick the right ones. And if, everything, if there is a catalyst that actually happens that gets this sector ignited again. Now that, it's been this way, like I said, I can think of at least 3 cycles in the past 21 years that have been as brutal as this one. Maybe not as long in duration, although 4.5 years from late 2011 to the end of 2015 was pretty long. And so, the previous 3 or 4 times when we've had environments like this, something's happened and it's ignited the sector. And, so maybe it won't happen this time, but, I'm betting that it will.
Some have talked about how mergers and acquisitions can ignite the sector. I don't think this Calibre Marathon deal will do that, especially from the Marathon side. I've already seen a lot of comments with upset Marathon shareholders. Maybe they bought at $3.50 a share 26 months ago, so they're not happy with a 84-cent takeover premium. Dave, what are your thoughts? Any more thoughts on this deal? And maybe you should mention what stock you own of the 2 companies.
Well, let's circle back a bit because, part of the problem that a lot of Marathon shareholders might have is a lot of them got caught up in that mania that hit Newfoundland projects a couple of years ago. Remember? Newfoundland Gold, Marathon. There was another takeover back then, Atlantic Gold or something. I forget who.
By St. Barbara's or?
Yeah, exactly. And so there was kind of like a bubble mania that hit the sector, and the valuations in these stocks just got out of control. As we were talking, earlier, Newfound Gold hit a $2 billion Canadian dollar market cap, $1.6 billion in US, something like that. And back when that happened, I had subscribers who owned it, and they would ask me about it, and I'm like, look, what if they don't even have a resource estimate? Yeah, I'm sure there's a valuable mine here someday, but how long is it going to take? What are the risks that are involved? And is it worth $1.6 billion for what they've shown so far? No. Eric Sprott didn't invest in Newfound. He invested at a much lower level, right? And so people got caught up in the mania and chased these stocks, and I think they overshot what their intrinsic fundamental values were for what they had shown at that point. And that was a couple of years ago when they were most of these projects were in their infancy. And so, in the type of environment that we're in now, I mean, these stocks have gotten battered hard, but they also overshot to the upside. Now I'm saying they're probably have overshot to the downside. And from the Calibre standpoint, well, they're taking a risk here because it's still not a finished mine project. And since this mania started, to my recollection, I don't think there's been any major gold mines that have gotten over the finish line in that time period. And I'm not saying it can't happen or it won't happen, but let's see it happen. And I think I know Calibre pretty well. I've chatted with management. It's been a buy recommendation since it was under $1. I mentioned to you earlier, I was actually happy to see the stock get banged today because I wanted to put some in my personal account. I mean, we have a position in the small fund that I run with my partner at higher levels. I think our average cost is around $1 US. But I wanted to put some in my personal account. And so, I bought some this morning, almost near the bottom, where it bottomed out this morning. So, and I'm probably going to buy more. Calibre's management, they really know what they're doing, especially in operating mines. And I know people are put off by the idea of Nicaragua. But if you actually do the research in the political environment down there towards mining, I mean, it's great. I'm not saying that, it's less risky than Nevada or Canada, but, I feel more comfortable being, quite frankly, at this point, and we'll see what happens, after the elections in Mexico next year, but I feel more comfortable being invested in Calibre with 2 mines in Nicaragua than I would be if they had, projects in Mexico where it's kind of chaos there. And it also depends on what state that you're of Mexico that you're developing your project in as to whether or not you have a shot at getting permitted. Now that could change after the elections and AMLO's gone, thank God. But the 2 mines that that Calibre has in Nicaragua, I mean, they're incredibly profitable. They're pushing through extremely high grade gold. I mean, the grades that they're pushing through there are ridiculous. In the context of a Nevada or Canada mine, they really seem to know how to build a project, get it over the finish line, operate it, and then optimize it. And I've watched them do that down in Nicaragua, and I have a feeling that's what they're going to do with the Marathon project. And so if you're a Marathon shareholder and you're pissed off at this deal, and I would be pissed off too if I were in your shoes. I'm not trying to make light of it. I mean, that's one of the things that sucks about the type of environment that we're in right now. And that's my biggest fear with some of the juniors that I cover that I know are going to have mines eventually and are just ridiculously, absurdly undervalued right now relative to what they have. I know the risk is that a company will come in and put a takeover offer on the board, and the management has no choice but to take it to the board and the shareholders. And so you can have these mines. You're still gonna, if you buy them down at these levels and wait for that to happen, if it's going to happen, you're still going to make money on it, but you're not going to make nearly as much as you could have if the company was allowed to stand alone and get the project on its own over the finish line. So if you're a pissed off Marathon shareholder and you have some extra cash to put to work, buy Calibre stock, because this is a gift. This is a gift from the mining stock gods that Calibre's down 11% on this deal. Because, just on the cursory look that I took of what Marathon looks like right now, after I saw, that this deal happened, Calibre's getting a great deal for Marathon, and it's going to be a home run for them. So, I mean, if you're sitting on losses on your Marathon stock, wait and get the share for share exchange, but also buy some Calibre down here, because Calibre was trading, and this is US dollars, it's at 88 cents now. It was trading I think it got as high as $1.19 like in the last 6 months. For sure $1.12. I know because I bought a little bit there in my fund.
Dave, are there any names you're willing to share besides Calibre?
Well, I was gonna talk about Calibre anyway. I wasn't sure if you were gonna bring it up as a topic, so I was gonna recommend buying Calibre on this transaction and the sell off in Calibre shares. A couple of these stocks I think I've mentioned in the past. And as I said to you earlier, like a dog returns to his vomit, I want to return to these because I think they deserve a lot of attention. And they're both, actually, all three of them aren't that well known.
So do you believe in averaging down then, right?
Fortunately for Viva Gold, I started accumulating it right around this level. It's just been at this level for, I don't know, probably 6 to 9 months. And that's a function of the market, not a function of the worthiness of the project. And so one of them is Viva Gold. And I know I've mentioned it on here in the past, probably a couple of years ago, but it's got a open pit, near surface, medium grade for the most part, but it's got a high grade aspect to it that'll be mined out first. And it's in the Walker Lane Trend in Nevada in Tonopah. It's called the Tonopah Project. And this has got to be one of the easiest projects I've ever looked at getting it from where it is now to an open pit, simple heap leach mining operation. And it's small, and that might be part of the reason as to why the market doesn't care about it. But it's got a $13 million market cap. And the way that I value these things, I think it's worth at least $100 million. And that doesn't mean that you're going to get a 10-bagger out of this if you buy the stock here. I mean, there's a couple companies in that area that could end up buying this project from Viva or buying Viva in its entirety before this thing gets to the finish line. One of them being Kinross. They've got their Round Mountain mine is not too far north. I think it's pretty simple shot on paved roads. So the thinking there is, and they have excess capacity at their processing facility. The thinking is that, and they're putting in an underground portion. They're almost mined out on their open pit portion. The thinking is that, this would be a great property for them to purchase and then truck the ore to their processing facility. And then that would save the upfront cost of building a mine. So at this point, this project's probably more valuable to a company like Kinross than it would be if you sit and wait for this thing to get taken to the mine stage. If it does get taken to the mine stage, I think it's worth at least $100 million. There's been some other projects in the area that have been acquired. AngloGold Asante looks like it's trying to consolidate the region a little bit. Centerra bought another a mining company there, or development company, and they paid the equivalent of around, I think the average transaction cost, and these mines they will be a little bit bigger than what Viva has, but the average cost, again, this is off the top of my head, but around $150 million for those projects. So certainly this thing's worth a lot more than 13 million. The second stock this one just really blows my mind, is Paramount Gold. EZG is the symbol. There's not a Canadian ticker on Paramount. It's got fully diluted about 55 million shares outstanding. Management has a track record of taking a project, getting it over the finish line, selling it. The last project they sold to Core, and they spun out one of the projects that's still on the back burner, and they went and they acquired the Grassy Mountain project in southwest Oregon, southern southwest Oregon. And that may be what people are worried about, permitting in Oregon. Well, here's the good news. The state is in the process right now, and they don't need BLM. They don't need a federal mining license. The state's in the process of writing the license, the license to construct and operate a mine. Now, again, that doesn't mean it's for sure going to happen. But if they've gotten it this far down the road with the state, then they're probably going to be awarded their mining licenses. The region badly needs the jobs and the tax revenue that this mine would produce. The market cap for Paramount's 19 million. And if you look at their project, if you look at the feasibility study, the net present value of it is 146 million. Well, I don't like to look at just, hey, look at the net present value of our project discounted at 5% or whatever. So what I like to do is I'll take that net present value, and if everything goes smoothly, and if by law the state has 12 months to issue the permits from a couple of weeks ago when they got the notice to proceed. If everything goes smoothly, this thing will be pouring gold in 2 years. So 2.5. So I took that MPV and discounted it back at 20% because I want to see what it looks like with a true equity rate of return built into it. And your market cap is, the MPV of the project is still 101 million. So you're talking about 5x from the current market cap. Now, to me, the risk reward upside is heavily skewed to the upside. So, and you know, your downside is not zero. If for some reason the state says, no, we don't want a gold mine in our state, which I don't think will happen, but you know, it's still a risk until it happens. But they've got another project in Nevada that, what I think is going to happen is, I think once they get permitted, I think a company like Calibre is going to come along and buy the project, and these guys will spin out this other project in Nevada and then go develop that one. So it's, you know, they're going to try and repeat. I think they'll try to repeat the same iteration that they did when this thing was originally Paramount Gold and Silver. So we own a big position of that in the fund that I operate. I haven't put any in my personal account yet, but I will when I think, because I've got a lot of capital committed to this sector already, and most of it I've put to work in the last couple months. Because again, I'm making a bet that, you know, we're at or near a bottom, and you know, I'm not guaranteeing we're going to pull out of this, but I think, you know, the odds are we will. And you know, again, there's still risks with Paramount, just like there's still risks with Vivo, but it's mostly de-risked. And I think it's undervalued here because people aren't willing to take the time to talk to the company, talk about the permitting risks, and then try and understand why the state of Oregon would or would not permit this mine. And I believe they will, because like I said, it's going to be a huge economic boom for that area, and it's an economically depressed area.
So Dave, you've obviously done your research. Like if you tell me Wyoming, I'm going to think conservative. They're going to be more friendly to mining. When I hear Oregon, especially when any election I watch, it's always dark blue. So, but what you're saying is you've done the research and you don't think it's going to be an issue with the local legislature or whoever issues this permit.
They already have the green light from the county that they're in. The county wants this project. Have you ever spent any time in Oregon?
No.
Oregon is an interesting state because you've got the left side of Oregon, which is on the coast, right? Portland, Eugene. And that's what I think people think of when they think, oh, Oregon's full of tree huggers, and they're never going to let mines operate in Oregon. But once you go just a little bit to the east of the left coast of Oregon, it gets conservative very quickly. I mean, and so, you know, it's probably more like Montana or Wyoming in that part of Oregon than what people think of, because they're thinking of Eugene, you know, that was a Grateful Dead, the Mecca, or Portland. So I don't know that the state would have allowed this thing to get this far if it wasn't going to get over the finish line and get issued permits. But who knows? We'll see. Like I said, that's part of the reason why it's got this market cap. But I think even more so is the fact that it's not a well-known company, and they don't spend money pimping themselves like a lot of these companies do. And we all know who those companies are. Some of them are in Newfoundland. So they put almost all of their money into this project, and management owns a decent chunk of this. So, you know, they've got skin in the game. That's one of the things that I like to look for when I'm looking at these project companies. And, you know, to circle back to Calibre, when the first time I looked at that, the first time I spoke to management, you know, the stock had was beaten down. And you know, the guy that I talked to there, he said, yeah, as soon as we get the blackout period lifted, there's a bunch of us who are going to buy shares, and they did. So that's what I like to see. And that brings me to my next one, is Cabral Gold. And I don't know, you know, if people in the audience are familiar with this. They've got a project down in Brazil. It's near surface, open pit, heap leach. There's also a deeper component where there's even higher grade gold, and it's probably they've got several. It looks like they're going to have several deposits on their project property, and but right now what they're doing is there's a at to near surface, what they call an oxide blanket layer. And it's essentially high grade oxide gold that's in mud and soft rock. And it is probably about as cheap as it gets to process in terms of extracting the gold. And they have a trial mining permit from the country, from Brazil. So they're permitted to build a mine, a small mine operation, and start processing it. And they're in the process of working to that. And again, it's one of these things, if everything goes smoothly, and assuming they can raise the financing to do the upfront cap, and they'll be able to do the upfront capex for this thing, they'll be pouring gold from this. And this is like high grade, just stupidly cheap to process relative to even a standard open pit heap leach operation. They'll be pouring gold by probably late 2024. And they're going to they'll use the cash flow from that to advance the rest of the project, because there's a much bigger project here. And I throw this number out. I taught, the CEO is awesome. He's a Brit. He's hilarious. And I'll like try to drag information out of him. And I'm like, Alan, this kind of feels like a 3 to 5 million ounce property. What do you think? And he'll just say, we think we got a lot of gold here we're sitting on. So, but one of the things I wanted to mention about that is he's the most aggressive buyer of the stock. Every time they raise money, he participates in the financing. He's the largest individual shareholder. And how many junior mining stocks have you looked at where management participates in the financing every single time they raise money? And when they released the results of the pre-feasibility study on this near surface, quick to get to production mine operation, I'm like, Alan, I mean, this stock is just stupidly cheap. What do you think the problem is? He's like, look, it's the market. And he goes, look, I know what I'm sitting on here. I'm a geologist. I've had success in the past, and I know this one's going to be successful. And that's why he puts his own money into this thing. I mean, he's the last time they did a financing, they had a little bit of trouble getting it over the finish line, and it was in a rough patch in the market. And I said, so are you going to buy some? He goes, I'm tapping out my IRA to buy more shares here.
And Dave, when you look for management skin in the game, in these conversations, one of the things at least I try to pick up on is what you're investing relative to your net worth. So some guys can throw around $1 million and they really don't care if they lose it or not. Other guys, if they write $1 million check, that's like 75% of their net worth. So do you kind of try to pick up on that without being rude in the conversations?
I'm not going to directly ask that, but you can tell when, if you ask the right questions, you can get a sense. And I know this guy, he's a straight shooter. He's got a great sense of humor. And I know he's like, I'm sure he's opened up coffee cans in the cabinet and pulled cash out to put more money into this thing. So yeah. And it's kind of rare to find when you see that, but when you see that, you got to take a close look at what they've got to understand why. And this is one of those things. I now that it's down at this level, because this one it's like, like all these other stocks, this thing, I think, traded as high as 60 cents back, a few years ago in one of the, manic run-ups we had in the sector. And so, I mean, at 9 cents US, I have no choice but to buy it, because I can't say that the market's not going to take it lower, but I leave cash available, because if it goes to 4 cents, I'm going to double my position in this thing, because the downside in this is not zero. They've got economic value here. They just need to flush out the advancement of this thing. And, you're probably about a year away from actual production if everything goes smoothly.
Well, Dave, you write Mining Stock Journal. Any update there? Or for new listeners, maybe just tell them what that's about.
Sure. Actually, the next issue's coming out Thursday afternoon. I publish it every 2 weeks. And I'll have a pretty in-depth analysis of Fortuna Silver and their third quarter results. And again, I don't cover just the junior exploration projects. I'm overweighted in those because that's where I think the real money can be made if you pick the right stocks. But I cover a handful of producers. New Gold, I jumped on that back a few years ago when it got banged down to 60 cents, and it's been over $1.20 between now and then. It's currently at $1.13. Calibre Gold is one that it's a producer, Fortuna. And I also include, like, if I see a short-term trading opportunity in some of these large cap stocks, like they get sold off on what I think is for unnecessary reasons, I'll mention that in the issue and just say, here's what I think about this. This is a trading opportunity. I'm not investing in it, but I'm buying, short-term call options on it. So, but I publish it every 2 weeks. And if you want more information, my website's investmentresearchdynamics.com. And at the top, there's a link to the Mining Stock Journal, and you can get more information about what it's all about. I want to mention, I don't take sponsorship money. I don't get any compensation whatsoever. I don't even take warrants from these companies. So I really pride myself on being fully independent. I don't look at Bay Street or Wall Street research. Sometimes people send it to me and I'll skim through it to see if maybe I'm missing something in why I might not like a stock. And again, it's I think I should mention, it's not just, pound the table on ideas that I really like. I get inquiry all the time on companies, and if I don't like it, I'll put it in my newsletter and explain why I don't like it. So First Mining's a good example of a stock that I steered my subscribers away from way back in 2016. And the stock's lower now than it was then.
We all have winners and losers. So that one did go on a run, though. I remember back in 2016, it ran for a little bit.
It did. It had the Keith Neumeyer charm on it. Put it that way.
Yep. Well, Dave, always appreciate your insights. Thanks for coming on the show today.
Thanks, Bill. It's good catching up with you.